Hey folks, Tom Gentile, America's #1 pattern trader. I'm back with you. I want to talk about how and why you would trade a put option. All right, so put options give you the right to sell a specified asset over a specified amount of time for a specified price. Why in the world would you trade a put option? Well, there's only one of two reasons I can think of. A, you want to protect a group or a block of shares of stock that you currently own. Or B, you expect that asset or stock to go down in price and you want to profit from the downside action that you expect to happen. So let's take Apple one more time and we'll look at it from the put side. So let's go to the computer. And you can see here, I have my options quotes back up again. And in the last video, we were dealing with calls. So we're going to come over to the put side. Here's the put options. Notice the put options get more expensive when they go up in value, and they get cheaper when they go down in value. Now, if I were looking at a chart in Apple, and that means I'm going to go to my chart, and maybe instead of this particular chart I'm interested in, let's cancel these orders. Let's say that I'm actually looking at the market going down in price and that this might be just a bear market rally before we go lower. If you have some reason, all right, to believe that Apple is going to go down in price, then a put option might make sense to you. Now, keep in mind, what we do is we look at patterns out there. I look at historical patterns. In fact, my software will run millions of patterns, different short-term patterns on thousands of stocks every single day to help me get an idea on what typically has happened over the last 10 to 20 years on each individual stock. And then I make my move. But what I want you to do is think about a reason why Apple or any stock for that matter may go down. A put option might be for you. So back to the puts once again, and you can see here, perhaps we're looking at, in this case, a 148 put. So a 148 put basically means you have the right to sell Apple between now and January 18th for $148 a share. Right now, that right is being granted for $360 to $370. Now, if you are bearish on Apple, you would look at buying a put option. This is what it's going to look like. I'm going to create a risk graph on this because I want to show you what this looks like on this particular trade. So here's the put. It's going to cost $365. All right. Now, that's $365 to control 100 shares of stock to the downside. So you're basically going to be short this stock, but in put format. The most you can lose on this trade is $365. Right? You didn't have to put up thousands of dollars just to short this stock. Now, if you notice here, the risk graph kind of changes. As Apple continues, if it does continue to go down, notice what happens. This particular graph, it makes money as the stock goes down. Now, if the stock were to go higher, the most you could lose is that $365, what you put into the trade, no matter how high the stock could go. But if the stock goes down, let's say it goes down to let's call it $140 a share. I mean, you're talking about something that could be worth, $562, $620. I mean, you're talking about something that can more than double in value just if Apple stock were to drop about 10 points in value. Because again, if you hold the 148 put, and let's say the stock goes to 140, that's 8 points in your favor, all right? Because you have the right to sell it at 148. If it's down there trading at 140, that's an $8 difference between 148 and 140. That means these puts are going to be worth at least $8. If you pay $365 for something that's worth $8, you more than doubled your money. Again, what's the whole reason for buying puts? Again, puts are something that you want to buy if you believe a stock is going down. All right, they have limited risk. They have a limited reward if the stock were to go to zero. All right. Now, that's unlikely to happen with Apple, but it could drop down in the low 100s. And dropping down in the low 100s means that this particular option could see 100, 200% or more. All right? And again, I'm only scratching the surface here, folks, but I really wanted to show you and give you an idea of what put options were designed for. And in this kind of environment, they have not been bad. They've been very good to people who have been bearish this market here as the last couple months as volatility has gotten higher. All right? So, hope you enjoyed this video. Hope you've enjoyed the series so far. I'll see you on the next video. Till then, have a great trading day. Bye now.